Hello and welcome to Fidelity Connects. I'm Pamela Ritchie. Emerging markets are home to the majority of the world's population, but still a fraction of global market value. And that gap is creating a deep and often overlooked opportunity set for investors seeking growth and diversification. Our next guest says that gives him far more ability to find disparate opportunities. So where are the most compelling investments across emerging markets today, and how should investors be thinking about building exposure? Joining us now to make his Fidelity Connects debut is John Dance. He is Portfolio Manager of Fidelity Emerging Markets Opportunities Fund. Warm welcome to you, John. Hello.
Thanks, Pamela, for having me on. I appreciate it.
Delighted to have you join us here today. And I'll just let you know that what we discuss today all has live French audio interpretation for those who want to join us in either official language here in Canada. And please do send in questions for John over the next 30 minutes or so. John, let's begin with a little bit. You've been with Fidelity truly around the globe for many years. Do you mind just bringing us up to date? You're in Boston now, but how did you get to this stage?
Sure. So I began my career almost 20 years ago. So August of this year will be 20 years at Fidelity. I started in Hong Kong as an analyst, looking at shipping and airlines and transport stocks in 2006. I ended up moving to the United Kingdom to look at consumer in 2008, and then went back in 2013 to Hong Kong, where I started running one of our diversified Asia products, and then an emerging Asia product, taking over an emerging market fund, a global emerging market fund in 2019. And in 2020, January, moved to Boston, where I've been ever since.
2020, so sort of in the midst of the pandemic there to an extent, wasn't it? It was all kind of unfolding.
Just for, so I thought, correct. Yeah, I thought I was going to be moving here to get down to and ended up being in my basement a little bit more than I would have liked, but had a good time exploring, the surrounds anyway.
Well, there you go. It's fascinating. The emerging markets have come into vogue, gone out of vogue. There's been a lot of moments where everyone thinks, oh, this is the moment. And sometimes it really is, and sometimes it's less so. A year and a half ago, the whole world got involved, it seemed, of investments with the international trade, and EM was a massive part of that. Obviously, did very well alongside that. Is that about done?
Look, I don't think so. I think we're still in early innings of what is a really long run opportunity. And for me, it just comes down to the raw demographics. When I look at the emerging markets, it's 70–80% of the global population. It's the majority PP adjusted GDP, and it's around 20% of the world's market cap. And so, as I see a rising middle class in a lot of these markets, with billions of people hopefully being moved out of poverty and moving into that rising middle class, they're creating lots of opportunities, a lot for themselves, self-innovation, new ideas for products and services, which they can initially serve themselves and then expand globally. And I think that's what the real opportunity is. It's a long one, driven by the fact of where people are and what we're now empowering people to do with the advent of new technologies and skill sets and education.
The fund itself, tell us a little bit about your style. Ultimately, what the fund sort of is meant to do in its key ways of organizing itself. How do you look at this fund? How would you describe that? Sometimes we like to do it in terms of style, but not always.
Yeah, so I think of what I'm trying to achieve as something I call structural growth. So the way I would think about that is superior business models married to improving customer value propositions. And what that really means is fantastic businesses as they are today. So that would be wide moats in that sort of Buffett Munger style of thinking about quality companies with fantastic management teams. And I really want them focused on how to make the products or services that they have better. And so improving the customer value proposition for me means the pricing can get better. You can make something the same price, but superior in terms of what you're offering your customer, or a combination of both. So there's lots of examples of that in my markets. I think of what Taiwan Semiconductor does, advancing the leading edge of logic chips as an example. But at the same time, I think of the service offering of a very deep discount supermarket in Mexico making products that are as good and broadening their range, but making it 20, third cheaper for their customers, and rolling that out to more places in Mexico is an opportunity that's doing something very similar. It's how can you make what you've got already great better for your customers?
And one of the things, I mean, just by nature of the way you're investing, you'll have to at least consider things like the global interest rate picture, how it's different in certain countries, where it's going directionally, and ultimately a currency discussion. If you've got a currency that is rocketing up or down, that's something to take into consideration. Are you able in the fund to actually lean into some of the good pieces of that? I mean, this is sort of the macro lens. Do you put that on?
Yeah, the first macro lens I put on is always the one for the companies and the countries which I want to avoid.
Okay.
And the reason is that emerging markets has a history of having significant drawdowns in the foreign exchange as a consequence of mismanagement at a government level. And examples like Turkey or Argentina over the last 15, 20 years, maybe not today, but back then are strong examples of that. We're seeing similar things in places like Indonesia today, with an increasing worry about mismanagement at that sort of level. So the drawdown is the thing I'm trying to avoid. But that's not to say that we aren't seeing pockets and areas of strength, in emerging market economies. The examples I always give at the moment, Greece is probably one of the better economies in the EU. It is part of emerging markets because of what happened in the European crisis over a decade ago, but now is going from strength to strength. Poland is going to achieve, it looks like, PPP adjusted GDP per capita better than the United Kingdom by the end of the decade. I look at what's going on in the Southern Cone, places like Chile as another example. The UAE up until the beginning of the Iran conflict, again, really, really strong in terms of demographics as well as the opportunity set from a macro perspective. So a broad range of emerging markets. We have everything hyperinflation in markets like I mentioned earlier, to deflation in places like China and everything in between. And what I'm really trying to do from a first principles basis, top down, is avoid the areas of critical loss and lean in more heavily to the areas where there is a sort of assistance or structural growth from first principles that the government is assisting in.
That was a wonderful sort of tour around, and a reminder that some quite well-known and more highly thought of countries around the world are still within emerging markets. I might just ask, I mean, China's been in the emerging markets, I don't want to call it a bucket, it's massive, it's like a sea, but for a long time. How do these things change? I know there's a financial maturity within the country itself that has to take place, but it does seem like some very well-established countries are still EM. So maybe just talk a little bit about that when that shifts, if it does.
Yeah, look, I mean, this is a definition according to MSCI. So I look at places like Korea and Taiwan and Greece as pretty developed, right, in terms of GDP per capita, in terms of education levels. I mean, literacy in China is 97%. Right, so we are talking. It has a GDP per capita much lower than those two countries, but PPP adjusted, it's continuing to improve. So the definition, of MSCIs is what I lean into as my lodestar. But in reality, what I'm really trying to do is capture those different areas of development, the best opportunities. And look, sometimes the macro matters and sometimes it doesn't. I have countries with very high levels of interest rates. I still can find fantastic businesses, which I won't be able to find anywhere else. So as a result, I'm more than happy to look past, those macro risks for the long run opportunity that the businesses present themselves.
If we look at Canadian investors making Canadian bucks and thinking to diversify around the world and have different exposures, it's not so long ago that Canada was a little bit written off as a petro state. It's not entirely wrong when you look at what's doing well in terms of sort of materials and energy, certainly in this country. I mean, there's some grounding for pieces of that theory. But how much extra exposure to other things would a Canadian investor get taking a look at something like an EM fund that you're running?
Yeah, I think I have a natural ability to think in a similar way to the Canadian investor in that regard. You may not be able to tell from my accent, but I'm from Australia.
Yes.
That's right. And so we have a very similar setup just from first principles, right? We have a large materials industry. We have a large energy industry. We export more gas than Qatar. And we have some banks, right? And so I am always also thinking about, what should I be in outside of those things? Just that's what I
That's
grew up in,
great.
the
Right.
environment. And so, look, for me, the thing about emerging markets, which is so fantastic, is the breadth, right? We have 11,000 stocks in my investable universe. More if I include the Chinese A shares, which aren't in the benchmark as well, which I think are fair game for me to look at. And it's all 4 points of the compass. And so what I'm really trying to do is turn over as many rocks as I can and find those gems across all those markets. And it can be, supermarkets in Poland, companies doing back-end business systems similar to SAP, but in an indigenous Brazilian context. It's Kazakhstani fintech companies, it's Chinese industrial power equipment businesses, it's the tech space here, Taiwan, it's skincare products in places like Korea. So it runs a very, very wide gamut. And so what I would say is that's why I find emerging markets most interesting. There is a supplemental number of fantastic businesses which can only really be found in those environments. And that's the sort of stocks I'm trying to own in a well-constructed portfolio. And I think that's what I bring to Australian investors and Canadian investors alike, is the opportunity to diversify away from the 4 or 5 key banks, the domestic energy exposure into some of these more disparate and very esoteric opportunities.
It is fascinating when you watch some of the trade alliances. I don't know if they're shifting immediately, but there's certainly a lot of discussion around increasing certain alliances as other alliances fracture a little bit. There's change there. How close of a pulse do you keep on that? Is that something that you watch very closely, or are a lot of the businesses quite domestically focused and don't have to worry about whether they will be exporting with or without tariffs?
No, look, it's of critical importance. I've been thinking about it a very long time. China and the China trade war began, in the first Trump administration, and so it's been food for thought ever since. What I would say is the unintended consequences of the trade war are actually really important to consider. We now see China as the largest manufacturer on the planet, and they've continued to grow even with the tariffs that have been increased over the last 12 months, so 12 to 18 months. And the reason for that is that there has also been, because of large capex investments and demand for non-Chinese products by the US, there's been large demand rest of the world for Chinese products, as an example. So, and I'm just using China as an example here in the general, but they've continued to grow in exports and in industrial production in spite of the tariff environment. What I would say is the uncertainty that tariffs are bringing globally is, I think, of importance. And it sort of hits back to me on one of the key components of my investment philosophy, which is it's much better to be in a business that people want, regardless of the tariff being put on, because your product's so fantastic or your service is so wonderful, and you're improving those products and services. And so that the tariff hits everybody, but the uniqueness of what you're offering, transcends, hopefully, some of those tariffs. So there are businesses which have increased sales in the United States in spite of tariffs of what they're offering to their customers.
That's fascinating. Can you just give us sort of an industry example? Maybe not the name, but what's an example?
Yeah, I mean, healthcare is a really clear example, right? So China has become a really, really important place, in the world of what I call molecules. I think of what China offers as the world of atoms, the world of molecules, and the world of electrons. And in the world of atoms, they're going from strength to strength. One of the reasons is they have a very large population, and so clinical trials have become extremely important there because we're all very genetically similar, regardless of where we live. And so the opportunity to develop drugs in China is increasing. The cost base of doing so is lower, and they've cut 1,400 days of red tape out of that process in China over the last 3 to 5 years. There's a really great article in Nature about that. And so, they're playing an increasing role in the global healthcare space, including in the United States, because the cost of the drugs that they can offer is going down. The number of drugs they're developing is going up.
That's fascinating. And we've been hearing about sort of the commoditization of the drug industry to an extent, a lot of that being actually manufactured and then exported from China. And there's more to do there. Can you give us a sense of regionally, maybe you don't like to carve it up this way, but I think people are always interested, regionally, the allocations and how that works. It's the question coming in just now for you on that.
Yeah, so let me just describe how I carve it up regionally first and foremost. I think of Latin and South America as a region. I think of the Middle East as a singular region. I think of Eastern Europe, and then into what would be called Eurasia as a region. And then I think of India, and I think of Southeast Asia, I think of China, and I think of Korea, Taiwan, and they would be the regions I think about.
That's helpful.
So at present, I'm overweight China. I'm slightly underweight India. I'm underweight parts of Latin America, but overweight others, so it's sort of neutral. And then overweight Eastern Europe, and then slightly neutral to underweight other regions.
Okay.
That would and then underweight Southeast Asia. That would be one of the largest underweights. So so at the moment, my positioning is the most obvious and important regional positioning is the overweight position in China.
Okay, fascinating. Okay, so that's the biggest. There are conflicts going on around the world. Don't want to get into those, but sometimes there are second order discussions of, because this has happened, a new company or industry has had to make do and actually succeeded because something else was scarce. And there are sort of the second order pieces that become opportunities that might not have been before. Are there some that you can point to? I mean, we'll talk to rebuilding certain areas, and then cement companies do very well in certain areas. Are there other types of examples like that have been of use that might be surprising actually to people watching here today?
Yeah, so I mean, the old one has been global defense. So I think that goes without saying. And just to highlight the fact that most of the conflicts that are happening in the world today are happening in or around emerging markets, right? It's no surprise that the UAE and Saudi Arabia have been impacted by the Iranian conflict, the conflict in Ukraine, obviously. So one of the beneficiaries there has been Turkey. It's at the center of all of this, but has been sort of uninvolved with most of these conflicts, excluding maybe at the margin in Syria. And so the Turkish defense companies, look positive. But the example I really wanted to talk about, is what we've really seen with the closing of Hormuz has been ton-mile going up, concerns about supply chains and things like energy, as well as other areas, like helium, for example.
Right.
And as those supply chains expand and increase, it does benefit the shipping companies. I own a company that's actually based in France, but they 100% of their sales are the industrial gas liner IP that they sell into the LNG carrier companies, which are made in China and in Korea. Okay. And so, these guys benefit because what we're seeing is longer ton mile means more ships are needed. If we're shipping energy and gas from the United States to Europe, that's the longer destination. If it's going to Asia, it's longer still. And so they're benefiting.
What's it made of? What's so special about it?
Oh, it's so the way that an LNG carrier works is really interesting. I used to think it was like your lungs, as in you could replace them with a lung transplant, but it used to sit on top of the carrier. Now it sits through the entire carrier, so I think of it as a limp system, and it's a real proprietary metal ceramic film, which is the secret sauce, and they're the only ones that do it, but you can't take it out later. And so an LNG carrier is in the hundreds of millions of dollars, getting these as films in the tens of millions of dollars. But you require it because you're also using the gas in your LNG carrier to ship everything from A to B. So you want to have as much of B when you get there. It's your fuel as well as your fuel as well as what you're selling, and so it needs to be as efficient as possible. And so to minimize the boil off, is a really important matter for the LNG carriers and for the gas companies on either end. And this is the best place to do it.
To do it. That's fascinating. So it's actually a French company, but as you say, the production and everything to do with the economics happens in Korea.
Correct. The way I think about my opportunity set is the economic interest has to be in emerging markets, or ought to be in emerging markets, or moving in that direction. So if you're an Australian-owned mine, but your mine is based in Brazil or in Guyana or in Africa, then I'm more than happy to look opportunity set.
Oh, that's really interesting. Okay. And what about, there are those that will say there's spheres of influence. Again, you don't have to buy into any of these big discussions about how the world will align because nobody really knows. But have there been more opportunities, for instance, of late in Latin America and South America, any that you might point to?
Yeah, look, I think Latin America, South America looks really well placed at the moment for a whole host of reasons. The first one is obviously, they're far away from the global conflicts outside of, I guess, what happened in Venezuela. So that's a positive, right? Their trade routes are secure. They're very self-sufficient as economies, as a collective. Brazil is the third most singular economy in terms of its GDP. In terms of net exports, is the third lowest, and the other two countries in Central Africa. I believe it's Nigeria and I think the other one, Chad, but it's not within my investable universe.
Are those frontier nations, for instance?
They would both be considered frontier,
yeah.
but also just investable universe there is quite small. But Brazil, it's not. And then the other thing we've seen, maybe the exception is Brazil, we will see this year later, is that South America has moved largely to the right over the last couple of years. First Argentina, but now Chile, Peru. And so what that does, it's meant better business practice, less risk of government intervention in market economies. So not only are we having strong tailwinds from the geopolitical environment, but the political environment itself is meaning that they're benefiting. The third thing being strong levels of rule of law, improving institutions, and then just great businesses with strong management teams. If you work hard enough to find them.
That's pretty fascinating. With the export discussion, just to kind of come back to that for a second, is there anything directionally that you see that might be useful just to share with investors? And this does go down sort of the discussion of new alliances, new exporting places for various countries, new neighbors maybe, and those across. But are there directionally some interesting areas that you would look to, maybe even just to sort of the future?
Yeah, look, the most important thing to think about is the fact that within the emerging markets, over 50% of trade is now happening within themselves.
That's fascinating.
Right? So this points to what I was sort of talking about earlier, where if you're a Vietnamese guy and you start a great startup, maybe that trickles down into Indonesia, and then to Thailand, and then to China. Or if the tech stack that China is in, everything from EVs to renewable energy to power equipment, is making its way into all these other markets. One, costs. Second reason is just the quality of product services being founded by people is getting better and better. There's a Kazakhstani company I own, which owns the tech stack in terms of how you interact with first e-commerce and second consumer finance. And they're so penetrated in Kazakhstan, you get your driver's license through this app. You can get married on the app. When you leave Kazakhstan to go to another country, on a holiday, you have to go to the ATM to get out a card because everything's done so digitally through that app in Kazakhstan. People want that tech stack. It's moving into other places like Turkey. And so, we're seeing the permeation of innovation and ideas and therefore export, both in products and services, happening within the market. So watch that space. The other thing I'd say is just the continued rise in India. India, 30 years ago, was sort of GDP per capita as China, and it's fallen by the wayside given the economic miracle that is China. And they are now trying to develop their export economies in a similar fashion. And so that's in very early innings, but there's still lots of incremental opportunities where that's happening. And so I see that as another exciting space to watch going forward.
How are you everywhere? Tell us about your research team, which must be literally in the four corners of the globe.
Yeah, they are. The good thing is that, I have two young kids, so I'm up early. And so I spend a lot of my time in the morning talking to Asia and a little bit to our team in the UK. We have a bunch of analysts 18, 19. I think we have a couple of interns there at the moment as well, so I might have to bump the numbers up a little. In Hong Kong, we have people looking at emerging market stocks in the UK and London. We have a team here as well looking at the rest of the markets, EMEA, LATAM. And so I had a lot of time bookmarked at the end of the day and at the beginning of the day talking to them. I had the good fortune of knowing a lot of them personally, right, having lived in both places. And so I've spent a lot of time, not just on the Zoom calls, but in situ with everybody. I know them really well, so it's always great to catch up. Part of my personal philosophy is I'm a connection maximalist. I spend as much time as I can talking to our own teams, talking externally, trying to connect the dots, because I think most of the alpha happens at those edge cases where I can, get people talking to each other, connect the dots myself on the mosaics which may come about, and generate ideas. That's where I find the deepest, most exciting long-term sources of alpha, because I can usually connect those dots earlier than others, get in a little bit earlier, and then be there on that 5-year view, as opposed to trying to chase trends. And so I spend a lot of time doing that. 2 to 3, 2 to 4 in the afternoon is my time where I get a little bit of a downtime, because markets are closed, things have settled in here in the US. So and then usually go home, have dinner, and then I'm back at it in the evenings, either for calls with management teams or with the analysts again. So Rust never sleeps, as that great Canadian musician once said. And so I'm working pretty hard around the clock.
I bet you are. That sounds like a fascinating career and job, and your team. That sounds just incredible. I wanted to just go quickly back to a point that you made there. I think you were talking about a Kazakhstan company, but just that idea of leapfrogging, if they've done such a good job of sort of having this tech stack with everything to do with, it sounds like government administration can all be done on it as well. Do you see
everything? Do
you see that all governments are trying to retool how they conduct themselves with better technology? Do you see emerging markets better placed to do that? Do exactly that?
In some cases it is, because they've never had anything, right? So, India is a great example. Brazil's a great example. They went straight to a tech stack which is digitally native, it's biometrically authenticated, and they went from having, 300 million people, 500 million people underbanked or unbanked, to having them all on this tech stack within 3 years in India. Brazil has one of the best, global digital native banks with over 100 million customers in Brazil, because again, they were able to go from having nothing to a global a banking and payment system that was developed by the government, which facilitated this huge rise in digital banking services. So amazing. I think we'll see more of this in my markets as we go forward. China was another example, with digital payments being very early, Kenya as well. So I think that they will continue to lead because of necessity, and just, being so low on the cost curve to do so means that you may as well do it.
Fantastic. What an exciting area and moment. What, as a final sort of word to investors, might you like to leave with everyone, considering, again, their exposure with their investments?
Yeah, look, I think that there's been a historical want to be underweight, even what I guess global allocation would suggest emerging markets you would want to be. But I would suggest that we are in a period of time now where the digital innovation is coming at such a pace, and people are able to innovate, self-innovate or innovate, in and amongst themselves, that the emerging markets is offering more shots on goal for that. So it's a really exciting time there, and I've never been more excited about that at all. And so I just, even if not interested today, I'd suggest to continue to watch this space, because the next couple of years are going to provide a real opportunity to find fantastic businesses here.
Oh, you brought in you spoke to Canadians' hearts there with the shots on goal. Well done. Okay. Super to speak with you, John, and have you introduced to this audience. Thank you very much for your time today.
Thanks for watching or listening to the Fidelity Connects podcast. Now, if you haven't done so already, please subscribe to Fidelity Connects on your podcast platform of choice. And if you like what you're hearing, please leave a review or a 5-star rating. Fidelity mutual funds and ETFs are available by working with a financial advisor or through an online brokerage account. Visit fidelity.ca/howtobuy for more information. While on fidelity.ca, you can also find more information on future live webcasts. And don't forget to follow Fidelity Canada on YouTube, LinkedIn, and Instagram. We'll end today's show with a short disclaimer. The views and opinions expressed on this podcast are those of the participants and do not necessarily reflect those of Fidelity Investments Canada ULC or its affiliates. This podcast is for informational purposes only and should not be construed as investment, tax, or legal advice. It is not an offer to sell or buy, or an endorsement, recommendation, or sponsorship of any entity or security cited. Read a fund's prospectus before investing. Funds are not guaranteed. Their values change frequently and past performance may not be repeated. Fees, expenses, and commissions are all associated with fund investments. Thanks again. We'll see you next time.